Hello and welcome back to FreightWaves Now. I'm your host, Anthony Smith, and coming up, we have Andrew Cox with the DHL Supply Chain Pricing Power Index update. But first, we're going to go to Zach Strickland with a carrier update brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your Friday Carrier Update presented by PowerFleet. I'm Zach Strickland, and we are, it's been a few days since we talked last, so it's a good thing to update the Outbound Tender Volume Index and the Outbound Tender Rejection Index, both on the exact same track that they were a few days ago when we last talked about it. Tender rejection rates now up around 23.99%, the highest they've been since June of 2018. They continue to get pressed higher after taking last week off a little bit. You can see that kind of slightly downward trend, but volumes continued to grow at the exact same pace. So carriers simply couldn't manage that volume growing beyond that. So after a little bit of reprieve, they continue to grow. Volumes again continue to expand. These are total tenders involved in all of this. So there's still just a extreme magnitude of demand growing right now, occurring throughout the United States, over 15,000, and continue to grow incrementally above that each day. And again, we're approaching the end of the month, so more than likely going to continue to grow until Labor Day, the holiday period for sure. So weighted rejection index, combining outbound tender market share and tender rejection weekly change rate. Where are we seeing the hottest spots in the country right now? Los Angeles and Ontario out there on the West Coast continue to be one of the stronger areas for spot market activity, and it continues to increase. We don't think it can get higher, and yet it continues to grow. Atlanta, Georgia topping the list today, week over week expansion in tender rejection rates. So Atlanta, Georgia, Dallas, again, tender rejection rates up over 27% right now. A lot of that capacity is coming out to the West Coast. They simply cannot manage it right now as the volumes continue to grow higher and higher. And again, Harrisburg, Pennsylvania over there. So some of the largest markets kind of in that smile across the country right now, really having some of the largest growth and expansion in tender rejection rates continuing. Elizabeth, New Jersey, Allentown, Pennsylvania, of course, getting abandoned, if you will. Some of the highest rejection rates in the country right now, up around Harrisburg at 30% for the larger market. Looking at the growth in terms of volume and how it is distributed throughout the United States, this right here is a good tree map to show you exactly why we're seeing such rapid expansion in tender rejection rates. It's uneven growth. We're not only growing, but we're growing at such a discrepant pace from everywhere else. Ontario, California has grown 23% of market share week over week right now. Los Angeles, 28%. Gain in market share. Savannah, Georgia, sitting out there at 15.5%. So some of these port areas growing rapidly, and the rest of the country not as much. So that makes it hard for carriers to get back to where they need to be, especially when you see growth in figures like that. So Los Angeles, Southern California have been some of the strongest volumes in the country over the last several months. We thought that they were going to settle down. They actually took a little bit of a breather there in July, did not expand as rapidly, but yet there we have it. A Los Angeles Outbound Tender Volume Index over the last couple of weeks in August, trending much higher in the orange, I should say. And then at the same time, customs. So I've got our import custom shipments coming out right here. You can see that they correlate quite nicely, as a lot of imports are still continuing to flood the ports there in that mountain blue line right there you see. So import volumes continue to grow, and that again leads a lot of what we're seeing on the Outbound Tender Volume Index for the Los Angeles market. So we're not going to see this slowing down for the rest of the month, more than likely, and it does look like things are not going to slow down. Looking at our Ocean Shipments Index right here, this is something that measures bookings. This is stuff that's 3 to 4 weeks away from hitting the port itself or even getting on a truck. We're still seeing 152% year-over-year growth in the containers coming across the water scheduled to hit the Port of Los Angeles. We just had a big record growth Long Beach. We just had record growth in the ports out there, and yet it looks like that's not slowing down anytime soon. And one more tidbit before we leave for the carrier update. We've got 2 hurricanes potentially hitting the coast next week, so certainly pay attention along the Gulf Coast. Check out Nick Austin's report on the weather all throughout the weekend, just to make sure that you are prepared for what's about to happen in 2020 next. And that'll do it for today's carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Welcome to the DHL Supply Chain Pricing Power Index update. I'm here with Andrew Cox. Andrew, what's the latest?
Well, Anthony, last week we stayed steady at 80. This week we've bumped up 5 points. The carriers have just continued to gain ground. The volumes, as Zach just said, continue to push higher. We can take a look here at the Outbound Tender Volume Index. I mean, it's just been on a straight tear. It's honestly increasing with an increasing rate of change. That's probably because the end of the month is coming up. As Zach said, shippers are trying to push out some volumes as fast as they can to get it off the inventory. That's a good thing for carriers. They have a lot of options right now, and they're exercising, which we'll talk about here when we get to the tender rejection index.
And it sounds like there's a lot behind this, right? So 85, that's not much more room for it to move up. So what is driving this besides just volumes?
Well, I mean, the volumes and the capacity. So after last week, we kept it steady at 80 because we kind of saw a drawdown. We had 5 days in a row where tender rejections began to kind of come down and fall. But we've seen a re-acceleration this week. We're now back up to 24% on the outbound tender rejection index, which is extremely high. If we look at that on a historical basis, we're now getting close to that upper band that we typically see in the 25 to 27 range, which we hit twice in that 2018 in that tight capacity environment. We're really getting close to there. So think back to that 2018 time when carriers were in a dominant pricing position there. We're back there now.
So volumes, capacity, all high. What's this doing to rates?
Well, it's pretty good. We have a look at the truck stop 7-day van rate here. I mean, again, off the bottom in May, just straight upwards. We had that little blip last week. We saw things kind of cool down, but again, re-acceleration this week. We're now above the 2019 peak that we experienced right there before Christmas. So I think we can push even a little higher here. We have carriers that know that shippers are trying to get inventory out of the door. They're going to take advantage of that, pushing rates as high as they can. I think spot rates can climb again this week.
So inventory is definitely being a tailwind. What are some headwinds potentially that might get in the way of slowing this down?
I think one of the headwinds is the possibility that we don't get another stimulus. I think that's definitely that weighs on consumers' minds. If we don't get probably another direct payment of $1,200, that's going to slow down spending. I know the unemployment benefits have now been extended with a little bit less from the executive order, but that second stimulus, if we don't get that hundreds of billions of dollars in stimulus, that's going to be a damper on consumer spending. But truth is that consumers are spending right now. They're spending at home, they're spending online, and they're going out and spending a lot at Walmart, home improvement stores. There's a lot of goods moving throughout the country.
Just as you mentioned, consumers are spending. We're seeing trends in different areas of retail, right? So as you mentioned, building products, a lot of people doing those at-home projects, and right. E-commerce, right?
Yeah, of course. E-commerce sales are through the roof. We're looking at almost triple digits year over year. We saw some earnings this week. Walmart had 97% e-commerce growth, and that's a company that's a $500 billion market cap, or $500 billion in revenue every year. So I mean, it's just unbelievable. And then Target as well, up almost 200% e-commerce growth. They're growing profits. The bigger are getting bigger. And it's happening a lot through e-commerce.
And so a lot of that's on the consumer side of things. There hasn't been a lot of activity with manufacturing and industrial production. Yeah,
it's been lagging a bit. We were you and I both were under the same impression that could be a source of growth when that sector gets backing up. We haven't seen that yet. I think we're just going to have to wait and see right now. We may have some demand pick up towards the end of the year. We know capital investments are probably going to be lagging this year. Businesses are going to be keeping money tight, so that could be definitely influencing the industrial production. But I think we just need to wait and see on that.
Excellent, Andrew. And where can people find more?
You can always go to freightwaves.com/passport for all the latest. JP's team will be doing a webinar this afternoon at 1 p.m. describing their newest papers this week, so check in.
Excellent. We appreciate it. Thank you so much. And thank you for tuning in. That's going to do it for this DHL Supply Chain Pricing Power Index update. Be sure to tune in next week for all the latest. And that's going to do it for this Friday edition of FreightWaves Now, but the content doesn't stop here. We have the hardest working media team in the industry, so check out our FreightWaves TV app on all your favorite platforms, including Apple TV. Thanks so much for tuning in, and we'll see you next week.